short selling or selling short. Now, this is the opposite of buy low, sell high, and this is more of a riskier technique. It's more of an advanced technique. Buy low, sell high, the opposite. With short selling, you're selling high and buying low, and the difference is your profit. Let me explain with an example that's outside of the stock market, then I'll bring it back to the stock market. So let's say you have a friend, one of your best friends, he just bought a PlayStation and he's playing the video games on it. He enjoys it, he talks to you about it, and you tell him, you know what? I'm interested also. Let me go ahead and borrow your PlayStation. So he lends his PlayStation to you, and you're a horrible friend because you needed some money and you end up selling his PlayStation for $500. A day or two later, your friend comes up to you and he talks to you about the PlayStation and the games. He asks you, oh, how is everything going with the games? And you're telling him like, oh, it's perfect. I love the PlayStation. I love the games. I'm thinking about buying my own. He tells you, okay, cool. I still want to go ahead and play my games, so can you bring back the PlayStation before the end of the week? Now you start to panic because you already sold the PlayStation and you're scrambling around. You're going to different stores and you happen to go to one store that sells new PlayStations at $200. You're like, perfect, because I sold it for $500. I can buy it for $200. So you buy a new PlayStation for $200. You give it to your friend and you just made a profit of $300. So you sold it at a high price of $500. You bought it back at $200. The difference, $300, that's your profit. That's pretty much what short selling is. Bringing that to the stock market, now your brokerage account will potentially charge you some fees, of course, and they will borrow those shares from investors that are with the company or even investors that are outside of the company. Now, the tricky thing about selling short, because this, of course, is a risky method of making money in the stock market, at least with buy low, sell high, the only money that you can lose is the money that you have invested into the stock market. So let's say you invested $500 into the stock market, one company, and that company ends up going bankrupt. You only out that $500 that you invested. But with short selling, your losses could be unlimited. So for example, let's say you bought or you sold, you were participating in short selling and you did a short sale on Coca-Cola. Coca-Cola was trading at $55. You think that Coca-Cola is going to drop to $40, so you can buy it back and make that profit. That between 40 and 55, that's the profit that you're making, that $15. But what actually ends up happening is that instead of Coca-Cola going down, the price actually goes up. So from 55, it's not going to 40, it's actually going to 60, 70, 80, 90. So as you can see, your losses are going to be unlimited because you still have to buy it back. But that's what short selling is.